Well, good morning, everyone. Thank you so much for joining us. I'm your host, Lisa McCollum, and we are back today with Mr. John Rhodes. We are here at Charles Schwab, and if you have been following us, you know that John is always bringing us wonderful advice when it comes to our finances. And if you're like me and hearing a lot of this stuff about banks going on now, a lot of us can be skittish about what's going on. So, John, tell us a little bit about what your take on.
Sure. Well, there were two banks that recently failed. They failed for very good reasons. They had very lax risk management. In times of financial stress, and the Federal Reserve has just created a lot of financial stress by raising rates so aggressively. They're in the midst of raising rates at a pace they've never raised before. Hopefully they're towards the latter end of that. Hopefully we're not going to see future bank failures, but the two that occurred were clearly due to mismanagement, and that's really not reflective of the overall banking system or financial system.
Right. Well, and John, you think that with this that's been in the news, it's just kind of one of those one more things that we need to be aware of, right? But not run away from.
Exactly. No need to run away from it. Just this is a time, the current economic conditions, a time to stay conservative. There are a couple catalysts that need to occur before it makes any sense to get aggressive. Those are the Fed needs to get to the tail end of these interest rate increases. We've got to get the debt ceiling reconciled to this deficit spending. I'm not a big fan of deficit spending, but the reality is that's what our government does.
Right.
And they've got to finance finance the debt. And that'll get worked out in May or June.
Well, like we said, John's always got great advice, and he helps us to understand exactly what's going on. So stay with us. We're going to be right back. We're here today at Charles Schwab. We will have more from Mr. John Rhodes. Stay with us. Well, welcome back, everyone. We are here today at Charles Schwab. We've been talking with Mr. John Rhodes, and John, you are so good about giving us great advice. I know we talked a little bit about, people are still a little bit nervous when it comes to the banks and what to do, but give us some advice or some tips about what the average investor needs to know.
Sure. Well, really since the beginning of the year, and the reality is it started last year when we were in such a terrible equity environment, it's a time to be conservative.
Yeah.
The U.S. economy has a lot of challenges ahead of it right now. The Federal Reserve is aggressively raising rates. We've got to deal with this debt ceiling, and we've got a Washington administration that's not very much pro-business.
Right.
So this is an environment where it pays to be conservative. As we've spoken before, you can now get a yield in money market funds in excess of 4.5%. You can get CD rates well over 5%. And part of the benefit of investing at Schwab is you're not constrained to just that one particular bank's CD or money market fund. We're able to offer a range of CDs from multiple banks. We have a variety of money market funds if you want treasury securities only, or we can satisfy the investor if they can let us know what their objective is.
Well, I think that is what makes the whole setup, being able to come and talk with John. You give the free consultations, asking people to come in. He's able to explain all of this so that we can actually understand it, because it is a little bit of a scary time sometimes, and you're always here to iron that out. Well, John, tell folks where they can get in touch with you.
Sure. The number should be on the screen here, as well as the website, schwab.com/Augusta. But if you give us a call, Catherine will readily answer, schedule you for an appointment. There's, as you just mentioned, absolutely no cost for an initial consultation, for that matter, ongoing consultation.
That's right. Well, go ahead, contact them today, and we'll see you next time.